Hello traders, Gary Wagner here. It is Monday, the 22nd day of October, 2012, approximately 11 o'clock in Honolulu, making it 5 o'clock in New York. And this is the daily report for gold and silver. Higher pricing in gold and silver, lower pricing in platinum and palladium, but nice strong showing in the precious yellow and precious white metals markets today. As you can see, current print on the board is roughly around 1728. That would be the bid, ask being $1 higher, or 1729, putting it up about $7 to $9 higher on the day. We did issue a buy signal this morning. I will talk about the strategy of that and the strategy of the buy signal that we issued in silver, all here on today's daily report. Speaking about silver, as you can see, a current print on the board, roughly a 32.38 in terms of the marketplace itself, in terms of highs and lows today. We're up about 35 cents on the day with a low of 32.01 and a high of 32.56. Traders, we did in fact issue a trade alert, a special trade alert this morning, and in that trade alert, we did recommend going long. We issued specific stops. I'll get to that in a second. But I do want to give you a sense of what I was looking at and what triggered the actual buy signal itself. I want to look at it first in two different ways on two different charts. Standard candlestick, that's this chart here, 360, and then we're going to go to a 420 Heikin Ashi, and both of them kind of aligned and kind of gave us that same really strong information. First thing I want to do is let me go ahead and compress this chart a little bit so you get a better sense or an idea of what I'm looking at. And we've got two basic fib retracements. This one here from about 1640 up to that just shy of 1800. I've got it pegged here, I think 1796, and this down at 1552 up to that same point. When we do that and we take a look at this market as it moved up, it really gave us a pretty strong retracement. The retracement was about 50%, a little bit more actually, but just right around there, 50% of this retracement here. And that to me indicated a fairly strong marketplace itself. In other words, I thought the retracement itself was in line with what we would see. And if we're looking for a basic ABC consolidation and correction in the market, it appears to me as though we might have seen the bottom of the A wave being this wave here. I think we're a little bit premature before, but I think that we've got the bottom of our A. Why? Well, if I look at it in terms of just a big count here, I can look at 1, 2, 3, 4, 5. 5 seems to be a good count because it is a standard count within the marketplace itself. Secondly, when we consider what kind of activity we've seen, we had really good support. If you look at it right in here, it was very, very supportive before the market took off and moved up a little bit. You've also got good support here. So this is going to be our next target area that we're going to look to see if the market can actually go to and actually take that out. I believe that's at about 1740 and change right in there. The other thing is that when we go ahead and really blow this up, you'll notice that we get, it's not quite a piercing line. A piercing line on a candlestick pattern would definitely have to go to the midpoint or above. We call this an on-neck pattern. The on-neck pattern meaning that the close here and the open are pretty much aligned. You can see that the market comes up. You don't have a really great boost, but you do get that boost as it moves into the midpoint territory of this prior candle here. And this, of course, this prior candle is part of that sell-off that occurred on Friday. Now, traders, all I've really done is gone ahead and converted this to our Heikin Ashi. It's still sitting at 360 minutes. We'll take a look at this, and if time permits, I want to look at a daily chart before we go into silver. But as you can see, when we take a look at this chart in Heikin format, let me go ahead and blow that up for us. And this is part of that $21 down day. You can see that comes in. We have a Sunday's trading activity, trading nominally higher. And we go from these large size red candles indicating a strong downtrend, as you can see here, to smaller red candles. The doji candle, there's our pivot point, and now we're going into green. This last candle, we have actually lost our lower tail, so I'm looking to see if it builds in energy. Now, if in fact it does, this in terms of a trade itself, I believe will be a shorter term trade, because what I am looking at is really the potential for this to be the completion of A here. As I said, this would be our B wave and then one final C wave down. If that's the case, where could we look in terms of an upper target to look to cover this particular trade? What kind of profit do I believe we can take out of it? Let me show you what I'm talking about. Okay, all I've done is gone in and put in a very, very simple Fibonacci retracement from this high here down to this low here. And what I am in particular, what is of particular interest is 50 to 75%. That's this band here. And so our range would be anywhere between, say, 1755 and 1777. That would be a logical target if in fact what we're seeing is an A, a B, and then our final C. If in fact that's how this unfolds, that would be what I'm looking at in this particular trade. And when we take a look at it with a longer term chart, meaning a daily, you can see that even though this move looks fairly sizable here, as you can see, this is our daily chart, but when we look at it under these confines, then you can see that this move is almost really a 38% retracement from these highs, but that would take us around 1700. I know that the lows that we saw were just around, I believe, 1712 to 1718. I'm going to have to check to see where those lows were, but they certainly weren't near the 1700 mark, but I had felt that we would see support above that. It does appear, at least at this point, that that is correct, at least for today anyways. And then finally, on a weekly chart, you can see we are starting off this week fairly strong with this nice up green candle. That would, of course, move into a piercing line if it engulfs it. I mean, if it trades to and above this open here, it would be an engulfing bullish. Now, silver. Silver is looking very, very similar. Let's go ahead and pull up our first chart. This is the chart we used for the opening of the show. As you can see, 32.26. On a daily chart, you see the Henkin have definitely not gone green yet. You can see also, just like we saw a 50% retracement in gold, it looks as though we've got that same kind of a scenario here, but it really becomes apparent when we look at a shorter term chart, in this case, a 420-minute. And as you can see on a 420-minute chart, here's that 50% where I believe it did find support. We have gone green. We have lost the lower wick. We've just got to see follow through. We've got to make sure that it is not just another small blip to the upside before having a strong downside, and that's why our stop is in place there. But as you can see, when we take a look at this market in silver, we've got a good opportunity in terms of where I believe this market could take us to. I'm looking at around, on the high side, 33.57, on the low side, 33.25. I think this is going to be our target area, our first target within this particular silver trade. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.